Evening everyone, welcome back to our channel Defcon FX. You're welcome back. Alright, so this is Euro GBP. If you follow the last video we dropped on Euro GBP and what is likely to do in this 2021, the video was released on the 1st of January 2021. If you follow that video, you will see this analysis on Euro GBP, and the short-term analysis was analyzed and will say that we're going to find Euro GBP that day making its way down to this low, and we can see that Euro GBP actually made its way down to this low. Alright, and if you took the trade on that Euro GBP, you should be up how many pips? You should be up 85 pips, say 80 pips. Okay, you should be up 80 pips, meaning if you had traded with 1.0 lot, you should be up $800 by now. And Euro GBP, remember that we'll say that we're expecting Euro GBP in the higher time frame to give us this zone, to fall to this zone, meaning if you took the trade, this is 1 week time frame, it's already on that zone, so you're going to have it come down to this zone for position traders. So you're still having, or for swing traders also, you're still having up to 500 pips to go. So 500 pips to go on, or 590, 600 pips to go on Euro GBP. Alright, so it's still going to make a pullback from that point. This is 1 hour time frame, so we're still expecting it to make something like make a pullback to this zone like this, okay, before we can probably find it making something like this and continuing down. Alright, so that's for Euro GBP. So the trade played very fast and very nice. Okay, so we're going straight to what we'll have for today. Now something on my screen says you might never make money trading support and resistance. You might never make money trading support and trading resistance. Okay, so now why do we say that? Like I said in the previous video, you see, when it comes to money in general, I think we've been told a lot of lies about money, and for us it's all about money too. It's all about money. So I don't think that we've been told the truth about the forex market, because no story that I've been told about money is 100% true. There's always 80% lies in the stories that have been told about money. One of the stories we've been told about money is that money is backed by gold, money is that, and money is that, and money is that. Many things have been told about money. Now money is not backed by anything. Money just printed by a group of persons, and that's the truth. You can make a research on that, right? So now FX or forex, capital market or currency market, is not different, because this is money, right? This is money. We are the big banks where everyone comes to trade their currency against each other. So they will come to trade currencies against each other. So why would we want to get the whole truth about it? So you see, the support and resistance thing is something I've tried very well. It's something that I've traded very well, and I know that 90% of the time it doesn't work. It means if you're a trader and you're trading support and resistance, meaning you're utilizing the information that the banks has perpetuated to the retail trader, right? And that is being used to work against us with the retail trader. So that's what it means that you're doing. You're using that same information that bank wants you to use. that the institutions they want you to use. Support resistance in real time. Support resistance in real time. Let's look at that and see how often it works out. Let's use the popular currency pair, Euro USD. Okay, and if you look at this zone, I could do this without looking at any chart. If you look at here, you will see that there is the zone. You will see that there is a the zone. You will see that there is a resistance zone there, right? Right, permit me to take out this headline so we can see the chart clearly. Right, if you look at that, you will see that there is a resistance zone here, and there is here. So meaning at this zone you buy, you sell. At this zone you sell. Now, when this market came to this zone and will sell at pullbacks, right? Meaning we have to wait for the market to pull back. When we got this market to this zone, now it sold. This sell candle here, it sold like it's really gonna sell, right? And then we'll find a spike above, spike below, like it's going to continue its way down. I have to show you that again. You see, it made its way to the high again, and then it spike below, then it spike above, like a confirmation that it's not going anywhere, and then it starts making its way down at this zone, at this particular price around here. The retail traders tend to place a sell to continue the sell at resistance and all that, and they will have this market go up, hit the stop loss of the retail traders, return back, encourage more sellers, return back again like that, encourage more sellers. Before you know it, all the stop loss. This is where the money is. This is where the money is, and once this money is made, the market is being dropped. Okay, this is the psychology behind trading. This is the way the forex market is programmed, right, to work on the retail trader psychology. That's why I made mention in the last video that the intraday trading, it's a very nice thing, but again, it's easier to work on the psychology of retail traders that does intraday to the psychology of retail traders that does swing. So it's much more easier to traumatize a retail trader that is over risking his account and is an intraday trader than a retail trader that swings. So that's why you see the bodies that have conflict of interest with the retail traders, like brokers and all that. You see that they set up a system that will tell you to come learn for free. Why? Because they know that you're never going to make money with that knowledge, and that's the truth. That's, no matter how hard it's sounding, that's the truth. Because the money I'm going to make with the information you're giving me for free, I don't know how that works for me. Right? So that's basically how this works. I could go on and show us. Okay, let's look at different currency pair too. A different currency pair on that. Now, if you look at this too, I'll remove it. If you look at this, you can see something. This zone happens to be a resistance, right? Meaning at that zone, you're supposed to sell. Now, this is what the market did. This is the manipulation here. The market got to this zone like it wants to sell. Let me point that very well. Like it wants here, like it wants to sell. It wants to sell. Before you know it, we'll have the spike, hit the stop loss, and then drop the market. That's why if you're a retail trader and you're trading support and resistance, you're taking the biggest risk, because that's where the money is. When the rational traders push the price to a resistance zone or a support zone, that's where the money is, and that's where the real manipulation starts. So you don't want to get trapped every time. You don't want to have your analysis correct, 70% of the time, and then you lose money 100% or 90% of the time. But you have your analysis correct 70% and you make money only 20% of the time. Why? Because you're using this, because at that zone is where it's just called like a manipulation time. That's just how the professional trader sees that zone, because that's what they taught retail traders to do. So when they push the price to that to resistance zone, when they push the price to resistance zone, they tend to push above, hit stop loss and drop, and that's just the way they do it, and it works really fast and really well. So like you see, this is supposed to be a strong a resistance zone, right? 15 minutes time frame. Okay, let's use a higher time frame. It happens in all the time frames. It happens in all the time frames. Okay, this is 1 hour time frame. Now if you look at this, you will see something like this. Okay, you see the retail trader, the professional traders, or the dealers, or whatever they are called, the liquidity providers. Okay, now if you look at this, you see there's a resistance zone here. Here is a resistance zone, so meaning at that zone should be a resistance zone. But look at what happened when they got to this resistance zone. They pushed the price above, hit the stop loss, stayed there, encourage more, and people that their stop loss is above are still hoping that the market the people that they have placed a buy stop here, breakout traders. That breakout traders have placed a buy stop here. The market just goes directly, pick their buy stop, and it's down, because breakout traders places their order above a resistance zone or below a support zone or above a resistance zone. So breakout traders tend to put their buy stop here. They place buy stop here, right, at this zone. Then they go straight, pick up the trade, and then stay around here. And there's this hope that the market is going to continue up. Of course, it has broken a resistance level. So for that reason, we are still going to find the market going up, and it has activated their position that it's here. So there's this hope that the market is going to continue going up. So before you know it, they keep whiling around here. What are they doing here? This is called accumulation. They are accumulating positions, and more traders are entering, believing that the market has broken a resistance zone, right? Meaning you should now buy. So this is a breakout trader. So it just when it's done accumulating volume here, it pushes it down. Simple. And that's basically how the forex market works. That's why it looks like your stop loss is always being taken out, and your take profit in market gets close to your take profit and never touches it, because this is the way the whole system is being programmed. We could go on and on and on and on and look at all that, This is again the same thing that happened here at the zone. We're finding this market making a resistance here, right? And then it went above, picked up the stop loss of the people that sold for resistance, and then it's down. Remember that if you sold for because the resistance, breakout traders has placed a buy stop here. So it picks your sell, hit your stop loss of the sellers, pick the position of this is buy stop traders, right? For breakout traders. It's for breakout traders. Okay. This is for breakout traders, and this is also for support and resistance traders, like people that sells at a resistance zone and buys at support. So there's a position here for sell for it to go down, then it goes above, hit the stop loss of the sellers, and activate the position of the breakout traders, and then it's all down. So this way, if you keep doing this thing over and over and over and over again, we can find it in all the charts. Look at it here again. See that here? This is the resistance, and it's 4 hours. See? Okay, let's look at it very well. You see, this is resistance here, right? Resistance. Now see this. When this market got to this zone, what happened? we found that the market made like it's gonna sell. If you look at here, like as if it's gonna sell. Now that was to encourage sellers, right? So at this zone the market went. Now at this, because of this reoccurrence, this reoccurrence is called accumulation. It's not, that's why I say they make money 10%. Now a trader that is taking resistance sell to support sell to resistance sell to support, it is making money here. Now when this is done accumulating volume, and the more they are doing this, the more they are attracting retail traders to be able to take positions around this zone. Now when they know that they don't have much liquidity or much money around, that's a lot of stop loss placed, there's a lot of positions placed around this zone, that's when it's CDX, right? But that's why I said you might not make money trading support resistance, because you might be coming in at this zone because you have seen a reoccurrence of this happening. You've seen it happen here, of course, the second time happened here, so it's encouraging more seller. If you notice that when this one got to this zone, it never got to the next support zone. Why? Because there are take profits here. So if there are take profits here, and you just make this and return back, and or people that sold here be like, okay, it's just a pullback, it's still going to make a lower low. Now it's just a pullback, and when he got to that zone, when he got to this zone, he stayed. He didn't make a lower low, meaning your sell position here is still on, expecting this market to hit the next support level. Now when he got to this zone, he stayed. It never got down to this profit. So the hope is that when he made the pullback, you're going to expect a lower low. Now he never made a lower low, and then he just stayed on this zone, and then spike above. So this that worked, first one, second one, was only to attract more retail traders to take position, not because they are making the structure for you to be able to make money. No, just to attract you to take trades. That's why we made that headline. You might not make money trading support resistance. You make money 10 to 15% of the time, and you lose money 80 to 85 or 90% of the time. Okay, so basically that's what all this is all about, right? So you want to increase your knowledge from a support and resistance trader to a more informed, balanced trader that understands the market manipulation. You understand why retail traders don't make money, especially in Africa, and of course globally. Most retail traders don't make money. Why that happens? You understand the psychology behind all the structures you see in the market. Everything that moves here is out of deliberate, logical decision. I keep telling my students, retail traders I'm privileged to come in contact with, I keep telling them there is no fight in the forex market, alright? All those are just to be able to make retail trader think that this will work. There's no fight between the bull and the bears. There's no fight at all. Everything here is structured, it's logical, deliberate, logical decision that makes this. Alright, algorithms makes all this. It's not fight between any buyer and any seller. Alright, so we'll be dishing more of this, and then your advice to subscribe. I will dish more of the analysis. You'll be able to follow up all the runs, and you'll be able to be exposed to what works in the forex market. Alright, so if you want to go ahead and get the full knowledge of how all this works, you can visit our website to get all the information you need, and then you're free to contact us at any time. Right, thank you for watching this.